By 2030, it's estimated that over 40% of India's total consumption, amounting to roughly $1.4 trillion, will come from its Tier 2 and 3 cities. If you're still solely focused on the saturated metros, you're missing a massive and rapidly expanding economic opportunity. In this video, we look at the often overlooked investment hubs in India's smaller cities, highlighting the real incentives and infrastructure developments driving their growth, backed by hard data. No fluff, just facts and opportunities. Several Tier 2 and 3 regions across India are emerging as strong investment destinations due to a confluence of factors like industrial corridors, agricultural advancements, and rising disposable incomes, with concrete economic indicators backing their growth. Let's take a look at some concrete examples of what's on offer here. The Coimbatore-Tirupur-Erode textile corridor in Tamil Nadu. This region accounts for an estimated 60% of India's total knitwear exports, valued at over $3 billion annually. Beyond textiles, Coimbatore's engineering sector has an annual turnover of approximately $2 billion, and its IT sector is growing at a combined annual growth rate of 15%. The Coimbatore International Airport handles over 3 million passengers annually, indicating increasing connectivity. Next, the Indore-Dewas Ujjain Industrial Belt in Madhya Pradesh. This belt houses over 5,000 industrial units, with the automotive component sector alone contributing an estimated $4 billion to the state's economy. Madhya Pradesh has witnessed a 17% increase in FDI inflow in the last 3 years, a significant portion of which is directed towards this region. The Visakhapatnam-Guntur-Vijayawada Economic Corridor in Andhra Pradesh. The ports in this region handle cargo worth over $40 billion per year. Andhra Pradesh's pharmaceutical exports are valued at approximately $1.5 billion, with a significant concentration in this corridor. The state aims to increase electronics manufacturing output to again $40 billion by 2030, with dedicated clusters in the region. Then we have the Lucknow-Kanpur Industrial Corridor in Uttar Pradesh. Uttar Pradesh is targeting $1 trillion in GSDP by 2027, with this corridor playing a crucial role. The defense manufacturing corridor in this region has already attracted investment commitments worth over $2 billion. The leather goods industry in Kanpur has an annual turnover exceeding $1 billion. Then we have the Bhubaneswar-Cuttack-Paradeep Industrial Region in Odisha. Odisha's mining and metal sector contributes over 10% to India's total output. The ports of Paradeep and Dhamra have a combined cargo handling capacity of over 300 million tons per annum. The state's IT/ITES sector in Bhubaneswar is growing at a combined annual growth rate of 12%. Look beyond surface-level information. These regions all have significant existing economic activity and clear growth trajectories backed by substantial figures. Beyond headline-grabbing national incentives, significant state-level and sector-specific incentives in Tier 2 and 3 cities can provide a substantial competitive advantage, often quantified in significant financial benefits. Here are concrete examples of state-level incentives in Tier 2 and 3 cities. Tamil Nadu offers a 50% stamp duty exemption for investments in less developed districts, often Tier 2 or 3. Power tariff concessions can range from 15 to 20% for the first few years of operation in specific zones. The state also provides investment subsidies of up to 15% of the capital investment, capped at 50 million rupees, approximately $600,000, depending on the location and sector. Madhya Pradesh provides land allocation at a 50 to 75% concessional rate in designated industrial areas in Tier 2 or 3 cities. Newer manufacturing units can receive GST reimbursement for up to 70% of the state GST paid for a period of 7 to 10 years. Investment promotion assistance can be up to around 10 million rupees, approximately $120,000, based on investment size and employment. Andhra Pradesh offers 100% reimbursement of stamp duty and registration charges for industries setting up in backward regions. Power cost reimbursement can be up to 1.5 rupees per unit for a period of 5 years. Capital investment subsidies can be 15 to 20% of the fixed capital investment, with a ceiling of approximately $600,000 to $900,000. Uttar Pradesh provides land at concessional rates with discounts up to 60% in specific industrial parks in Tier 2 and 3 cities. It offers exemption from electricity duty for 5 to 7 years, It also offers a capital subsidy, which can be up to 20% of the project cost, with a limit of around $1.2 million in certain priority sectors and regions. The state of Odisha offers exemption of stamp duty and registration fees. It provides a power tariff rebate of up to 30% for a period of 5 years. There's also a capital investment subsidy up to 25% of the investment in plant machinery, with a ceiling of around $2.4 million in designated backward districts. These aren't just vague promises. States are putting significant amounts of money on the table to attract investment to their Tier 2 and 3 regions. Overlooking the rapidly improving infrastructure in many Tier 2 and 3 cities, including enhanced connectivity and developing industrial parks, can lead to missed opportunities for efficient operations with tangible progress evident in key metrics. Here's a look at the infrastructure developments with some supporting numbers. Developing industrial corridors. The Delhi-Mumbai Industrial Corridor, DMIC, has seen over $17 billion in investments committed across its various nodes, many of which are in Tier 2 and 3 cities in states like Gujarat, Maharashtra, and Madhya Pradesh. The Eastern Dedicated Freight Corridor has over 1,300 kilometers of operational track, significantly improving freight movement to and from Tier 2 and 3 industrial hubs in states like Uttar Pradesh and Bihar. Expansion of regional airports. Under the UDAN scheme, over 76 new airports and 425 routes have been operationalized, significantly enhancing air connectivity to smaller cities like Nashik, Hubballi, and Agra. Passenger traffic at these regional airports has seen an average growth of 25 to 30% post-connectivity. Growth of logistics parks and warehousing. Investment in logistics infrastructure in Tier 2 and 3 cities has seen a surge, with players like Mapletree and ESR establishing large-scale warehousing facilities in locations like Bhiwandi, Hosur, and Chakan, offering grade A warehousing space comparable to metros but at potentially lower costs. The government's Bharatmala Pariyojana aims to develop 35 multimodal logistics parks, many strategically located near Tier 2 and 3 industrial clusters. Improving power and water availability. States like Gujarat and Maharashtra have achieved over 99% of village electrification, ensuring reliable power supply even in remote Tier 3 areas. Investments in dedicated industrial water supply projects are increasing in regions like the Coimbatore-Tirupur belt. Digital infrastructure penetration. India's rural internet penetration has crossed 40%, with the government's BharatNet project aiming to connect all Gram Panchayats with high-speed broadband, creating a robust digital ecosystem in Tier 2 and 3 regions. The infrastructure in Tier 2 and 3 cities is not just being improved, it's being strategically developed with significant investment to grow industrial growth and connectivity. India's Tier 2 and Tier 3 cities are no longer just hinterlands, they are emerging economic powerhouses, offering a unique blend of significant market potential, attractive and quantifiable incentives, and rapidly improving infrastructure backed by billions in investment and tangible connectivity growth that foreign investors can no longer afford to ignore.